Welcome back. Flat for the market. So let's talk about Justdial. The company reported a good set of earnings with a healthy growth in revenues, both sequentially and year-on-year. The company's margins also saw good improvement and are now at a 2-year high. Rima caught up with Abhishek Bansal, the Chief Financial Officer at Justdial. Listen into what he had to say.
See, paid campaigns addition of either 16,000 or 18,000, it could have some bit of quarterly fluctuations. Overall, the way we look at it is pre-COVID, we were at about 536,000 peak campaigns, and now we have surpassed that and we are at about 538,000. So this year, paid campaigns have seen a very strong additions. And going forward, the way things are panning out, we think that future growth will be driven partly by paid campaigns and partly by realizations as well.
Have you managed to up your pricing on an aggregate or blended basis?
So last year, sometime during the second quarter, we had taken about 12 to 15% price hikes across geographies, depending on type of category of SMEs. And as I mentioned earlier, for the coming year, I think part of growth should come through realization growth as well.
When is your next price hike expected?
So the way it works for us is we have two types of listings. One is the premium listings and other is the non-premium listings. In premium listings, there is a price reset that happens every month, depending on how traffic is panning out. So there might be a category where we are seeing a lot of users coming in. Those categories would see that price hike happening on a monthly basis. And conversely, also, if there is a category which is showing any decline in traffic, we pass on that benefit as well to our upcoming advertisers. So to that extent, our particular pricing algorithms are highly dynamic.
Got that. Can you talk about your margins? Margins currently stand at 14.4% at the EBITDA level. You have been talking about improving your margins. Where do you see it headed?
So margins, optically based on reported revenue of 845 crores, yes, they are at about 14.4%. Or 15.3% if we just exclude the non-cash ESOP expenses. However, important to notice, we collected 945 crores last quarter, almost 100 crores higher versus the revenue that we accrued. So to that extent, on an exit quarter basis, we had about 268 crores of collections. And on that basis, our margins indeed were 25% plus. So as we move forward into fiscal 24 and as our revenue converges with our collections for this year, this margin should sequentially keep on seeing an uptick, which is visible in last 2 to 3 quarters as well.
So sequential improvement in margins will continue, right?
Yes, definitely. So this quarter itself had about 202 basis points increase. So similar increases should keep continuing in coming quarters as well.
So about a 200 basis points quarter-on-quarter margin improvement, right? That's something we should anticipate from Justdial going forward. What was the ad spend this quarter?
About 6 crores we spent for the quarter.
And do you have any guidance or targets on ad spend going ahead?
So on a long-term basis, I think this business requires 6 to 7% of our top line to be spent on advertising. It could fluctuate a bit on a specific year basis. For coming year, I think anywhere around 35-40 crores definitely we would want to spend. And further increases could depend on how things are panning out.
You have a very, very large cash on your books. Abhishek, you keep getting asked that, and your standard answer has been that you are focusing on growing your core business, but your core business itself is generating cash and it doesn't require additional cash, this 4,000 crore that you're sitting on. So can you explain, if the company has any thoughts on utilizing the cash ex of the core business, something in FY24, can we see you move on it?
So very valid question. There is a large 4,067 crore treasury that we have today, and we are efficiently managing it. It yields about 7.2% returns at this point of time. Going forward, part of it could deploy it for any organic or perhaps even inorganic opportunities, considering the fact in last 10 to 12 months, valuation expectations across the board have come down and there could be adjacencies which we could get at decent valuations. But we will explore as and when any such opportunities come. So you are right, free cash flow are strongly generated by the core business. And while the 4,000 crore cash on books stands as it is, we would look to deploy part of it in any organic or inorganic opportunities in future.
Abhishek, this is the first time you are talking about inorganic opportunities, looking at adjacencies which are now available at reasonable valuations. Can you elaborate a little bit more on that? What is it that you are planning? And are you in talks with potential targets, acquisition targets?
So there aren't any specific opportunities that we are evaluating per se. The key point being that we have a great war chest, and at times like these, we as a company have always been profitability focused. So since we have a good amount of cash and there are good opportunities to deploy, which could be value accretive, we would be open to looking at those.
But nothing on the anvil right now. You have some new initiatives.
Nothing specific, yes.
You have some new initiatives which you are working on. One of them is JD Expert, the other one is JD Mart, and the third one is JD Shopping. Can you tell us where each of these initiatives stand and what is the outlook on each of them?
So JD Mart primarily pertains to B2B side of our business. JD Mart has been a great driver for our growth in last year or so. So JD Mart platform is very much live. JD Experts is basically a transaction layer that we are adding for services. As we speak, there are pilots that we are conducting in across 10 to 12 cities in 10 to 12 on-demand home services categories. During FY24, we intend to scale up transactions in these particular vertical. And the third initiative, JD Shopping, we are evaluating unit economics on this particular initiative. And the idea is to ensure that maybe fulfillment will be done by SMEs itself. And it could be a lead generation or price discovery model wherein we help users to be able to discover what are the prices available in local stores and thereby interact with those particular businesses and do the purchases.
How much did JD Mart contribute to your revenues, or what were the revenues of JD Mart last year, and what is it growing at? Any numbers for next year, FY24?
So B2B segment revenues were about 26% of our overall revenues last year. And overall, in last 2 to 3 years, this particular segment has obviously outgrown the B2C side of revenues. And we expect such outperformance to keep continuing in coming years as well.
And is it profitable, JD Mart?
Yes, definitely. So overall, the whatever margins that we earn, even the B2C side or the B2B side, definitely our particular paid subscription business is highly profitable. And in fact, because B2B ticket size is higher versus B2C, that ends up generating even higher margins.
So B2B margins are higher than B2C margins, right? Your
Yes.
JD Mart margins. And
Yes.
will JD Expert go live in FY24, first half, second half, and will it generate revenues for you?
So at this point of time, JD Experts is already open for users, and scaling up of those particular transactions should happen sometime during the first half of this particular fiscal 24.
Okay, that's one of the big stocks in focus, 6% higher now. And the management commentary is also quite strong, actually. Revenue growth is on the upside, and they talk about JD Mart, which has been a big driver of growth for them. But let's get back to the markets, not the equity markets, but the commodity space.